There are plenty of different strategies, I think, at this moment possible in Spain. I think there is a very, very clear gap about the need of debt and the not availability of debt. So trading on that segment, that opportunity, I think, can be very, very efficient. Markets are a bit irrational. You know, when values go down, when probably you are at the floor, at the bottom of the cycle, lenders do not want to expose because they got cut in the high part of the cycle and they have legacy issues. But that doesn't make a lot of sense. Probably is the best moment to start lending, especially on the core segment, at a very, very good risk-return proposition of value. So I think that's a good area. I would put some money there, for sure. And then, you know, betting on that we are on the floor of the market, or assuming, you know, that we are getting from the market that some recovery should be coming soon, I guess, you know, probably it is not needed to get into, obviously, development, but we can start choosing assets that are well located or that have good fundamentals, and just realizing that for 5 years there hasn't been any new capex applied to assets. You know, this is location, location, location. Choose a good location, choose an asset that you can fix or that you can put some capex, some smart money in order to upgrade it, and just operate in the gap between demand of core product or good product that is not available, and just produce it. Just produce it with product that is good, that has the features in order to be upgraded, and just put it on the shelf for all this institutional money that globally are looking for this kind of product, and they are not finding it to some extent. So this would be my two bets, apart from diamonds.
Great.
My view would be, as I said before, I think that is a sector to be in, because the drop that we are going through, it makes it very interesting. In the long term, I think that residential and big portfolios might be interesting, and with this size of money that you are giving us, I would do some of that, trying to get good locations for sure, because everything has been very, very punished in terms of value. So if you have a long-term investment strategy, I would do some resi, and I don't know if office buildings are in a good moment yet to have a great increase of value and price, given the fundamentals are not there, but and companies are not taking up additional space for the time being, but people need places to live in. So out of that, and some diamonds as well. Maybe not as many as Adolfo, but but some.
Jason.
I think from a structural perspective, I like primary residential in Madrid and Barcelona. Not the volume buys that we've seen in the market. I think at the moment the lack of a functioning mortgage market is having a very dampening effect on primary residential prices. The issue on entry is it's obviously a very granular way to build up a portfolio, but I think you could, with an improvement in the mortgage market, you could see a dramatic improvement in pricing, albeit against a rather flat macroeconomic environment. So that would be number one. For a more conservative and passive investment strategy, I'd like to try and get hold of some reasonably well-let or long-leased office income, but not on particularly strong assets. So there, I think if the yields appropriately affect the nature of the real estate, then that could be interesting. And I really like secondary retail. It's not flavour of the month right now, but I feel it's where the work is to be done in a market like Spain. It's very asset specific, but there could be some exciting returns in that sector.
Good, thank you. Mario.
My view is at least 50% of that money I will put it in retail. In retail, prime, secondary, as you have said, in cities that are not prime, but the asset could be prime. Places where you can do things with these shopping centers, an extension, a refurbishment, not a very dry shopping center, okay? I'm not a passive investor, I like to do things with my investments. The other 25% will go to residential. If I were lucky to find out another social houses portfolio, I will go for it, because I think it's very stable incomes and it's very good, it's social housing. And the other 25% will be in refurbished office in Madrid, because I think that there are a lack of AAA buildings, offices in Madrid. It makes a lot of sense to take one of those buildings, refurbish and put it in the market in 2 years' time, when I think that the office market will be back again. And that's it.
Great, thank you.
Well, I would invest 100 million euros in core retail in Lisbon. In Lisbon, there are modern and efficient real estate assets in dominant positions. Yields are above 7%, so I believe Lisbon could be a good location. I also would invest 200 million euros in dominant shopping centers in secondary locations, both in Portugal and Spain, and 200 million in redevelopments of good assets, trying to convert them in prime or near prime assets, both in Portugal and Spain, in cities above 300,000 inhabitants.
Great, thank you very much.